Hi, everyone. I hope you're having a pleasant weekend. We're going to start off with the New York Stock Exchange because the NYSE is the first index to crack the 50-day moving average. The NYSE is rolling over below the 50-day moving average. Not surprising because the two weakest sectors on the day was real estate, investment trust, and oil stocks. They got hammered, just absolutely hammered, but the REITs got hammered the most. So obviously, with those being mainly New York Stock Exchange stocks, the index is going to do more poorly than the others. But the key is that for some that think that it should bounce here no matter what with it going through the 50-day moving average, I want to show you what's most important. Remember, we went from oversold levels to overbought levels very fast without producing huge gains. So we're obviously entitled to go ahead and digest some of those gains. But you can see the NYSE is now starting to really roll over here with its MACD, and its TSV is really starting to pick up speed on the downside. And that being said, looking at the New York Stock Exchange, look at my slow stochastics. Just like the RSI that you're seeing right here, the RSI is getting more towards the middle ground, which is great, but the stochastics still look overbought on this index. The S&P 500 is holding the 50-day moving average, and as you can see, the RSI is helping to roll over from overbought. It's about the mid-range, but look at stochastics, still very, very, very overbought, and a potential long way to move lower. So right now the S&P 500 is in a precarious position, and that can also be seen here with the MACD and the TSV also both rolling over very harshly now. The Nasdaq, as you can see, also rolling over from overbought conditions and moving lower. And I want to just show everybody that it's confirmed here. Look at stochastics, still very, very overbought. Look at Wilder's RSI, still technically overbought, so there's still potential a lot further to go. And right now we're trading in between this price range between the recent lows and the recent highs, but based on the volume pattern and the current price patterns, the red bars look more prominent than the green bars, and the big tall red bars in volume look more prominent than the green bars. So odds suggest with an overbought market we should move lower. Not guaranteed though. Russell 2000, as you can also see how it's acting with the price action. It's right at its 5200-day moving average, but you can see since the most recent downturn started here on the 3rd of August, we've got a lot more vicious looking red bars than we have nice looking green bars. So that should be of concern. And as you can see with the oscillators, still overbought stochastics. Getting more the middle term with the RSI, but nowhere near oversold. And the Russell 2000 MACD starting to really roll over now. TSV also confirming the move. So I would think that we're still got further to pull back. I'm not necessarily bullish here. Not bearish either, but short term I'm actually more bearish than bullish. And on that note, we had some full sells today. JLL was just a recent long, and it immediately failed. Always a big red flag whenever you get a nice new long position fail so dramatically. So big red flags hitting up with just that one full sell signal. SPG, as I already told you guys in the new positions page, my hard sell stops were fully triggered on this one, and I am totally out of SPG. But if you are not, you better believe with that move lower today, on Friday I mean, you need to be completely out of it now. And also SAVE 7017 is a close below the open of the signal day under a neutral condition, 7050. So that it becomes a full sell, especially with its 3rd day in a row of about average selling volume. So 3 days, you can see, not that great. Still, the stock's fine. So if you want to use the 50-day moving average as your final cut loss signal, that is your prerogative. I'm not. ENPH, also another big winner. We already took 10% off back here after these 3 days of action at following the close below this low of day, 1406. Took 10% off there. Now we're going to take another 10% off because even though this has some big recent growth and earnings should be good next year, it's still a speculative stock. So with it losing its green bop, I want to go ahead and take 10% in. ABC, you can make it 100% sell, but you know what? Another big intraday reversal, and it's still above the low day of my signal day. I'll just sell another half. So basically I have 25% of the original position. So ABC is a 50% sell to me. SWKS is more cosmetic, not shown on the chart, but it is closing below the 20-day moving average, and it hasn't really put in a lot of gains. And as you can see here, the 2 momentum indicators are turned down, so that is a 25% sell signal. Taro, I don't mind if it doesn't move up immediately after the first day, but if it doesn't move up immediately after the second day and doesn't close flat We got problems. And there you can see it pulled back a little over 1% and volume is heavier. So Taro is a 50% sell. You can make it even more, but it's right there. The 50-day moving average is a pretty bullish chart pattern. So I actually want to see it fail before I get out of the entire position. In TCT, 25% sell, closing below the 10-day moving average on above average volume. Oscillators are really rolling over here, MACD, TSV, so I'm a little nervous about it in the short term. TRGP, I unfortunately am all out of this one. My buy stop was hit today. It was at like 139, I do believe, and as you can see, it got down to 138.21, so I was fully shaken out. But TRGP is closing below the 20-day moving average, and it's turned our small gains now into like even smaller, basically flattish gains. So TRGP, especially with the oscillators, TSV and MACD rolling over, that is a 50% sell with the close below the 20-day moving average, as you can see here, closing below the 20-day moving average. But this stock should have moved higher by now. It had a very, I swear to God, this signal right here, that was a 10% signal. This stock should have exploded higher immediately. And the fact that it's still treading water just makes me nervous. I'd rather wait for another long signal to get back in and just go ahead and be safe than sorry. ILMN closing below the 20-day moving average, as you can see here, on an increase in volume, a very quite clear close below it. Still holding the 50-day moving average, so no need to sell anything more than 25% unless you only have 2 shares. And if that's the case, sell 1. So ILMN's 25%, and then WGP turning our small gains now into basically flat, tiny losses. So just going to protect some of the capital in case it wants to roll over. That's a pretty big one-day crack. You can see if you just draw an uptrend line between the recent lows, it shouldn't have broken below it, and it did. 25% sell. And ARII, all the moving averages are now rolling over. 5 is leading 10, 10 is leading 20. Confirmation close below 20-day moving average. That's 25% sell. Going to go ahead and add to our SQQQQQQQ position as it appears to be consolidating here. And you can see here on these oscillators that's going from oversold, and now it's starting to break out and trend higher. So that's also whenever we look at what we just showed you on the indexes, what I just showed you on the indexes, you can see that, okay, it's probably lined up that we do want to fall overall in the market. So we're going to add 2.5% to this SQQQ hedge. Should be getting me to nearly about, 8 to 10% invested in this guy. With leverage, it's pretty good. But I also got a long signal, SCTY. SCTY is bouncing right off the 50-day moving average, producing a pocket pivot point buy signal. Now, granted, it didn't go out of its high a day, but after the midday, later day highs, it pulled back, and in the final hour had a very nice final hour rally and a very good solid close. On top of that, the oscillators look good in here, TSV and MACD, and we got a pocket pivot point buy signal. So to me, it's worth it. It's not a 5% signal. With the neutral signal, it's only going to be 2.5% of my account value. And if we're wrong, a close below the low a day, 71 or 50-day moving average, and we need to completely get out. We don't risk too much for a big potential reward, let's just say based on this just last move from here. Let's just pretend. We can make a 34% gain when we risk 3. That's about a 10-to-1 ratio. I'll take it any day. Also, if you want to get fancy out there, there are 2 small plays I'm going to put on, only giving it to you guys in the video. Taser, going to go ahead and play around with Taser. It's a very, very bullish stock, very, very bullish reason for this stock to be rising following Ferguson, Missouri. Everything looks good in it. I'm going to go ahead and poke a little bit. It's too nice of a chart for me just to pass up on. Feel like it's really breaking out and like it wants to move. And then BBLU, I don't know much about this stock except for it's under some huge accumulation, and its company name is Blue Earth. I do know that the sales growth is good, the earnings aren't so much. So, a little poke just for some fun. It doesn't cost me much, like I said. My commissions are very cheap, so I can go ahead and play this, but I don't recommend it. That's why it's only for platinum subscribers, those watching the video. 1 to 2% in Taser, not sure exactly what yet, and then 1% in BBLU, because even 1% of a $3 stock is a very, very costly endeavor with 6-figure plus portfolio. All right, everyone, have a wonderful rest of your weekend and a great upcoming week. Thank you.